Ladies and gentlemen, I have a question to ask you. And this question will kind of highlight why this entire country is asleep at the wheel. Well, Trump warned us of all of this, but the morally superior, intellectual, liberal Democrats, and especially AOC and Bernie Sanders, do you think that AOC or Bernie Sanders are talking about or tweeting an ABC News article, U.S. unemployment claims rise? Unemployment claims are rising. Okay? The unemployment rate is increasing in many parts of the country. Unemployment claims were rising according to the latest data last week. Inflation is at a 13-year high. The GDP is being revised downward. The consumer price index and the producer price index are at highs not seen since 2008, and the Baltic Dry Shipping Index is at highs not seen since 2008. In the comment section below, in the chat, why don't Bernie Sanders and AOC and Madam 1032nd Elizabeth Warren, why don't they talk about that? Eric, hello. Luke, hello. Two best moderators in all of YouTube, hello. Ladies and gentlemen, I apologize, but just try to keep the chat, as civil as possible. Definitely no use of profanity, it doesn't really, basically the content creator gets it if there's any profanity in the chat. So, but Eric and Luke are amazing moderators. I have the best chat, best live stream, late evening live stream in all of YouTube. And to my super chat, I can't do this without you. So give me your thoughts on the economy. Give me your thoughts on my view that there's going to be an upcoming crash in the stock market and within the cryptocurrency markets. And I don't say that with glee because the philosophy behind Bitcoin resonates with me. It resonates with me. The philosophy, the ideals of people who really care about Bitcoin. I appreciate those ideals. I just think it's going to collapse and the stock price will collapse. In large part also because Facebook and Twitter are teaming up with the United States government to try to destroy Bitcoin. To try to create a digital currency backed by the dollar, which is the antithesis of what Bitcoin is all about. But to my super chat, thank you. I can't do this without you. And Testa, hello. I can't do this without you. And hit subscribe to this channel. And ladies and gentlemen, hit subscribe also to my other channel, the Stock Market Crash channel. Now, people might say that's a bizarre name. Why did you name it the Stock Market Crash channel? Well, I think this is going to be a defining moment for this generation of Americans. A self-induced economic collapse last year and the repercussions of an ill-advised, irrational, self-induced wound. These economic consequences are going to be catastrophic. You look at Evergrande and China's number one or number two property developer and real estate developer has $300 billion. And I talked about that $300 billion in debt that they're probably going to default on. Here's the stock market crash channel link. Subscribe to it. It's in the chat right now. It'll be below in the pinned comment. Why do you think, ladies and gentlemen, why do you think AOC and Bernie Sanders and Elizabeth Warren and the far left communist and socialist on Twitch or on Twitter, why do you think they don't talk about the consumer price index and the producer price index being at 13-year highs? Why don't they talk about inflation? Why don't they talk about stagflation, which is rising inflation and a decrease in GDP? So when they talk about inflation being good, they're convincing themselves, as part of their delusions, that the economy is heating up and we're rebounding, and that's the natural repercussion is inflation. Oh my goodness. The opposite is true. We have inflation because 20% of the money supply, according to the Financial Times, has been injected into the U.S. economy through quantitative easing and the Fed buying up government debt, which eventually adds liquidity and pumps money into the U.S. economy. But it does so in a way, in addition to the unemployment and the stimulus checks, which were only designed to address the completely irrational and inept and ludicrous self-induced shutdown of our economy last year. So Democrats said, oh, no. The authorities and experts don't want you to work. They prevented people from working. You could not work because safety. 160 million plus people in the United States labor force, most of whom are below the age of 65, most of whom don't have numerous pre-existing conditions. And we know the global catastrophe in terms of health affected a certain population of people with a certain health condition that did not address that the United States labor force was told not to work for over a year, prevented from working in one way or another. We had record low unemployment with Trump, wage increases. We had manufacturing jobs, hundreds of thousands. Roger Rabbit! I say this to you and your listeners, Bice. Then Roger Rabbit, thank you. The only problem is if the gardener or if your neighbor or if your wife or husband or if your kids or if somebody spills the beans on that. Roger Rabbit, thank you. Roger Rabbit, thank you so very much. Roger Rabbit, everybody here, we had a flourishing, soaring economy. And I'm not telling, I respect. Well, let's see. I said that Clinton would lose, and she did lose to Trump. That's number one. I said that more people would be indicted. So number two, we have the second person indicted in the Durham probe. I said that Trump was not going to get indicted because of Trump Russia, and the whole thing was fabricated. He never did. The $20 million venture capital people were saying that he was going to self-impeach and leave within a year because of his ties to Russia. I said that Amy Coney Barrett would be the next Supreme Court justice. She was. Lots of things. And I'm saying there's going to be a stock market crash, and there will be. Unfortunately, I hope I'm wrong. If I'm wrong with that on that, that'll be great. If I'm wrong on that, that would be great. But a lot of my analysis, I've gone if I'm wrong about Clinton replacing Biden, I think we understand now that mashed potato brains If Mashed Potato Brains was running for mayor of your town, probably wouldn't win if he wasn't propped up by all of media. Ben D, 8 million unemployed and 10 million job openings. We're on a roll, I'd say. Exactly, Ben D, exactly. Ben D, thank you so very, very much. I'm not right about everything, but my analysis, you can compare my analysis to the CNN, MSNBC, the $20 million venture capital people on Fox. You can just compare what I've been saying. I said in the very beginning, the whole thing with Trump, Russia was a setup. The entire country was taking it seriously as if these were apolitical, objective, unbiased, nonpartisan intel operatives. I was saying that that's absurd. The whole thing was a setup. I mean, I was saying that in 2016. At the end of 2016, when Trump won, when nobody thought he would win, and you could read my writing and see my videos on hagoodman.com, I was the only person on the left, really the only person on the left at that point, to say that Clinton was going to lose. Ben D, thank you. Thank you, Ben. We have a labor shortage. With job openings. We have a labor shortage and jobless claims. Does that make any sense at all? Ben, Roger Rabbit, everybody here, does that make any sense at all? Every single economic indicator, aside from corporate profits, and corporate profits, 40+% of corporate profits in the S&P 500 are from the banking and tech sectors. That's not really an indication of the entire economy. So you're looking at corporate profits being not showing a true snapshot of what's really going on. There's a psychological element to corporate profits propping up the stock market, okay? People were told to stay in their homes for a year, either because of curfews from very peaceful First Amendment protests. Ben D, thank you. Robbie, hello. Dina to die, hello. Everybody, hello. People were told for a whole year to stay home. They were prevented from working. The government stopped them from working. And when they got a chance to actually go out, restaurants, travel a little bit, live life, they were willing to spend more for goods and services. Okay, now you have real wages where people lost, because of inflation, about 2% of their salaries, according to one estimate. So corporate profits are not going to go up. Okay? Corporate profits are not going to keep going up. They're not going to keep going up if you have a situation where inflation keeps going up. Real wages will go down. Then you have stagflation, which is economic growth stagnant or decreasing or missing expectations. So it's like wages are rising, but inflation may have given workers a 2% pay cut, CNBC. So you have a situation, ladies and gentlemen, where I thank Styx very much. He's awesome. I voted. Thank you for letting me know. Styx is awesome. The analysis of Styx Exenhammer is spot on, and when it comes to politics, when it comes to electoral politics especially, and when it comes to his analysis of mashed potato brains, our beloved president, it is spot on. There's a lot of great people. Sticks, Tim Pool, Brandon Tatum, HB, Hard B, I'll just because of the algorithm, but HB does live streams, Liberal Hive Mind, but HB is fantastic. I think my viewers know, Hard B. There's a lot of if you're not watching, and Sticks is fantastic, okay? Sticks, X, and Hammer is fantastic. Also, if you are not watching 2 channels, you have to watch. Not saying that I'm just saying that they're fantastic, and I'm going to leave it at that. They are absolutely fantastic. I'll give you the links right now. Young Ripper 59. He needs to be at 4 million subs. He has 419,000 subs. Okay? Here's his link in the chat. So Young Ripper 59 is phenomenal. Excellent. Okay, he's awesome. He's really, really, really good. And, okay, another channel, Papa Duck. He has 231,000 subscribers. He deserves millions as well. Okay? I'll put the 2 in the chat. The 2 links. So Young Ripper and Papa Duck, I put in the chat the links. Subscribe to those channels, ladies and gentlemen. They're fantastic. The analysis is spot on. And as with every channel I endorse or like or watch, I don't necessarily agree with everything, but the intellect and the wisdom is there. They're both awesome. So there's so many great voices. And thank God that we still have free speech somewhat. Young Ripper and Papa Duck have amazing segments lately. They always do, but you have to watch what they've been saying the past couple of weeks. But you look, and getting back to, I respect people who invest in Bitcoin and crypto. I respect the ideology and the philosophy behind it, but I think it's going to crash. I think it's going to descend and crash and collapse in value. Okay? Don't take any investment advice from me. Just consider everything I say to be, like, there are people who say, you know what? You don't know what you're talking about. And that's the right mentality. When listening to me, the mentality should be, you don't know what you're talking about. That should be the mentality. If it happens to be, hey, it makes sense, great. But you have 1 Bitcoin equals $47,891. Now, the reason I think, there are a number of reasons that I think Bitcoin and digital currencies are going to crash in value. Okay, number 1, when the stock market crashes, and it will, unfortunately, I hope I'm wrong, God forbid it does, it will, I hope I'm wrong. AOC, Bernie Sanders, every righteous and morally superior communist, and especially the never-Trump Republicans as well, the establishment will be blindsided like it usually is blindsided. We have Evergrande, the second largest real estate developer and property developer in China that is very likely going to go bankrupt. Default on $300 billion with a B, dollars. In addition to the subsidiary companies that Evergrande has, a $90 billion loss not long ago in an electric car vehicle company. They also have, there's a tremendous amount of risk. So the risk management and the exposure to debt among banks and hedge funds pertaining to China, their economy, the fact that the largest real estate developer is very likely going bankrupt or getting nationalized, the ripple effect, the consequences, I mean, we have no clue how it's going to affect banks in this country, hedge funds in this country that are exposed to risk associated and the debt associated with that default. Because if you're talking about derivatives trades, we don't know A, how much margin and debt hedge funds have in these contracts between the bank and the hedge fund, the derivatives contract. So Archegos, the hedge fund that went under a couple of months back, the United States government, the Fed, and the Securities Exchange Commission didn't know that it had $50 billion in risky derivatives. The SEC didn't know, the Securities Exchange Commission didn't know that Credit Suisse and Nomura, Japanese bank, and Morgan Stanley, and others loaned Archegos, the now bankrupt hedge fund, billions of dollars to engage in risky trades. So what do you think happens if that hedge fund goes under and that's a $10 billion loss? What happens to derivatives and derivative contracts where they're either linked to Evergrande or the Chinese economy? What do you think happens in the short term and the long term for investors in our stock market, in the Dow, the NASDAQ, the S&P? What do you think how do you think Wall Street is going to react? Initially, it might not be a catastrophe, but you have all of these signs. They had a housing bubble. We very likely have a housing bubble. If we've seen that what takes place in that country eventually takes place here. I don't want to get into it. So $300 billion in default for one of the largest property developers in the world because of a housing bubble in China. A hedge fund goes under a couple of months back, $10 billion in losses for banks. $20 billion, the man who owned the hedge fund lost $20 billion in 2 or 3 days. Go look it up in Bloomberg here. Bill Wang, Bill Wang had $20 billion. Then lost it all in 2 days. Bloomberg. I'm not making it up. $20 billion in 2 days. So the potential for catastrophe is there. The contracts, the derivatives contracts, have nothing to do with stock ownership. So you don't have to notify. You don't own a stock. If you have a contract, a derivatives contract, the hedge fund, between the hedge fund and a bank that loans them money, or a bank that provides brokerage services. If the hedge fund doesn't own the stock and they're only betting on the price increase or decrease, if they're making bets on the fluctuation and they don't own the stock, they can bet or they can borrow on margin billions without notifying the SEC. That's a loophole. And I already talked about the Financial Times reported that Dodd-Frank hasn't even been implemented when it comes to the derivatives. And Five of the top five banks in the U.S. have $157 trillion with a T, trillion in derivatives, unregulated. Most in a great percentage are unregulated and hidden in many ways from regulators. You think Elizabeth Warren or Bernie Sanders or AOC are talking about this? They're going to be completely blindsided. There is a 1 quadrillion, 1,000 trillion dollars in derivatives on the planet, with banks and hedge funds and investors on the planet. 1,000 trillion. 1 quadrillion is 1,000 trillion. Okay? There's 1 quadrillion. And you know what? You can listen to this before you go to bed at night and you'll sleep. If anybody who has insomnia, just play this, and I find it interesting. But 1 quadrillion, 1,000 trillion dollars worth of derivatives trades on the planet, contracts between a bank, a lender, and a hedge fund or an investor. And since you don't own the actual stock, and the contract has to do with interest rates or stock price fluctuations, or fluctuations in interest rate, or fluctuations in the price of anything from cryptocurrencies, which I don't understand why. I don't understand why the people who worked so hard to build Bitcoin are okay with derivatives trades. That is what Warren Buffett called a weapon of mass destruction. Derivatives are risky because you are betting on a price fluctuation. Generally, in a bull market, you're betting on a price fluctuation upwards. What happens if the market tanks 20 to 40% in 1 or 2 days? What will happen is a mass sell-off of stocks, prices go down, and you've lost billions upon billions upon billions upon billions of dollars in derivatives. And what happens is when you lose money, you get a margin call. So if you are running a hedge fund of 10 or 20 or 30 billion dollars or more, the top hedge funds are the biggest ones are 150 billion. If you're running a hedge fund and you are borrowing on margin, we have the greatest, the highest margin debt in history. Okay, the greatest dollar amount of margin debt in history, and as a percentage of GDP rivaling every crash from 2008 to 1987. If you go ahead and buy derivatives on margin as a hedge fund, or buy stocks on margin as just an investor like you and me or whatever, which you shouldn't do, you can buy twice as much with borrowed money. And then you can have contracts with banks that will probably, if you're a hedge fund, give you even more money. So you increase, you get all of this all of these derivatives, you have all of these contracts with borrowed money in derivatives trades, tens of billions of dollars in debt that you're going to have to pay back if there's a steep decline or a spiral or downward spiral in terms of stock price. For whatever reason, all Viacom was offering new introducing new shares into the market of their stock. Okay? That's all that happened. And the price dropped downwards 1 week, and it caused Archegos to go under. Okay? It was just 1 week where it caused a hedge fund to go under. You have the GameStop short squeeze. So that showed people initially this year how sensitive hedge funds are to price fluctuations. In this case, you had Redditors buying up shares of GameStop just to show a hedge fund that, that they can short, the favorite company of Redditors or Redditors within that Wall Street Bets. And so that hedge fund had to get bailed out. Then you had Archegos, a hedge fund that actually collapsed because Viacom stock went down 1 week. Now you have Evergrande, the second largest real estate developer in China, with $300 billion in potential default in terms of debt that they can't pay back. And then you had talking about so February Treasury yields fall after savage bond sell-off abates. So then you had something very peculiar a couple of months back. Prices on U.S. Treasury rallied on Friday following the most turbulent day for the world's biggest bond market since the height of pandemic-induced decline in March last year. Well, again, that wasn't... The microscopic organism doesn't create policies. Our reaction to it was the most dysfunctional, inept, ill-advised, hysterical, paranoid reaction that is now going to cause another crash. But here, the yield on the 5-year Treasury, which was at the center of the fierce rout in U.S. government debt on Thursday, fell back to 0.73%. When bond prices rise, yields fall. Meanwhile, the yield on the 10-year note slid 0.1 percentage points on Friday to 1.4%, having leapt to a fresh 12-month high. Okay, so you had this sell-off of government debt in February, which was bizarre. U.S. Treasury saw record selling in March. Foreign investors sold record amount of U.S. Treasury bonds and notes for the month of March. So you have all of this uncertainty in the stock market and in the debt market. You have interest rates at zero. You have the Fed with quantitative easing pumping money into the economy. And then that causes investors in the stock market to be petrified of what's called Fed tapering, when they stop buying government securities. So it's not the financial channel, but I just there's a lot there. There's a lot to talk about in terms of politics, I guess. But I've done so many segments on the Durham probe and General Milley and Biden and Afghanistan that, the Evergrande collapse in China, people aren't talking about. So I think it's important. I do think it's really important. If you look, ladies and gentlemen, if you look at the writing on the wall, getting back to why I think cryptocurrency will tank and Bitcoin will collapse in value. When people lose money and the stock market tanks and you have everything from retirement accounts being depleted to layoffs because, companies lose so much money in their share price, they can't raise capital, they can't get a loan, and you could have layoffs, you could have bank bailouts. When times are uncertain, people are less willing to speculate. Okay, when the stock market keeps increasing in value, people don't mind speculating. The thing with Bitcoin is that you have the Bitcoin market, or the cryptocurrency market, is also elevated by the fact that people are buying a great deal of, or they're borrowing a lot of money, buying a lot of stock. We have the greatest margin debt in history. They're buying stock on margin debt. When that collapses, you're going to see less people willing to risk money in Bitcoin or cryptocurrencies, just because they'll be frightened and they'll want cash. And unfortunately, because I do, the ideals resonate with me. I respect the people who believe in Bitcoin. I respect them greatly, but there is something to be said about a currency backed by a government. You might think it's arbitrary, but then, people like Warren Buffett say, well, an algorithm or a blockchain or a formula is also arbitrary. So people will want to revert back to what they know, even if you think it's irrational. So that's one reason I think digital currency and cryptocurrency will tank. Another reason is that there's so many competitors to Bitcoin. And then when the technology talk is beyond my comprehension. So there's a million different ways to store the money. There's a million different competitors. Bitcoin, if you listen to people, it's a first generation technology and this is more advanced and this digital currency is actually better. And it's like, so you have all of these competitors and you have technology evolving every single day. And then you have the issue, ladies and gentlemen, of Facebook and Twitter trying to team up with Biden's administration to create a digital payment system globally on their platforms, circumventing Bitcoin, that's backed by the dollar, which is the antithesis of Bitcoin. So you have a lot of really wonderful, intelligent, smart, sharp, vibrant, enthusiastic people in their 20s and 30s who truly believe in digital currency. And I respect those people. I used to be that type of person, 20 years ago. I used to be idealistic and think that, the future is now and all that stuff. What happens is when markets crash, they crash quickly. And sentiment changes quickly, within a couple of days or less than that. And there are a lot of 20 and 30-year-olds who have thousands upon thousands of dollars in digital wealth or paper wealth, or not paper, but digital wealth. that could evaporate within a day. So that's, I mean, we're not even getting to Biden's completely counterproductive infrastructure plan that Moody's and the Wharton School of Business both say is going to decrease GDP. You have to understand something. I was a lifelong Democrat, and then I became, further left. And I can tell you that they don't care about the majority, not everybody. People on the left generally, the pundits especially, don't, and the politicians, don't bring up economic numbers. They don't care, or they don't really understand, or they don't, I'm not an economist, but I have a certain level of economic knowledge. You need a certain level of economic knowledge to understand that, okay, very likely or almost certainly, the market's going to crash. I'm predicting a market crash. I'm predicting a cryptocurrency crash. And I don't predict that gleefully. I think it's going to be terrible. I think good people, wonderful people, fine people, idealistic, good, awesome people are going to lose a lot of money because of Biden and Democrats and media and never Trump Republicans. Had we listened to Trump, none of this would have happened. But he was vilified and demonized and marginalized, and, they don't want it. Look, they don't want to hear the truth. The truth is actually suppressed and gets people in trouble. So they don't want to hear it. It's called misinformation. They don't want to hear it. And it's like, what happens to this country? What happens when there's a stock market crash? What happens? Okay? We already had a whole year and a half of paranoia, of trauma, mainly from media, okay? Because, this country, the United States of America, the average American was probably less frightened during World War II than they are now. And that was an existential crisis, obviously. We have media that pumps hysteria and fear and paranoia, and they're selling emotion. I'm not selling emotion. This is, yes, doom and gloom, but I'm saying every segment, I'm saying focus on love, life, happiness, laughter, joy, success, health, wealth, and the trajectory of your life shouldn't be the trajectory of this country. Because the next couple of years, hopefully 2024, Trump can save this country from mashed potato brains and bumbling Blinken and all of them. And the experts who are always wrong, who are always flip-flopping, and then demanding you give them blind allegiance. We're in for a very, very tumultuous time. This is going to be the second crash in a span of 2 years. The second crash. Okay? You already had a crash. This will be the second crash in 2 years. So exactly. They're selling us fear. Exactly, Eric. They're selling us fear. That's what they're selling. And people are buying it. Okay? People are buying the fear. There's also a great deal of arrogance, too. So you have all of these, AOC and Bernie Sanders type people on Twitter, which is like a forum, almost like a spiritual or religious experience, like this platform that has replaced church and synagogue or in, every place of worship. And people go there for like spiritual sustenance. So they're like, oh yeah, Medicare for all should be, and the wealth inequality, and the billionaire class, the billionaire class, the billionaire class. Well, why don't you talk about economic data? Because it's all terrible, Bernie. The man that you pushed for, who, by the way, they railroaded Bernie Sanders yet again in Iowa, yet again. They are never talking about economic indicators, economic data, inflation, consumer price index, producer price index, Baltic Dry Shipping Index, stagflation, the potential for margin debt at an all-time high, Evergrande, $300 billion default in China, derivatives that are in the hundreds of trillions of dollars, that a great percentage of which are unregulated. They're not talking about any of this. They're not talking about any of this. Why aren't they talking about this? To the people below in the upload in the comments section, if you've lasted this long, Bernie Sanders, I've taken on big money interest. It's like, no, he hasn't. And it's like, they don't ever talk about the economics in depth, because too much discussion actually points right back to the fact that Biden's economy is terrible. We have jobless claims up, and we have a labor shortage. How does that make any sense? There are businesses that need workers, yet more people are filing for unemployment. How does that make any sense? It's because you had an unnatural, un-American, completely paranoid response last year, fueled by the hysteria of media and Democrats, in large part to take down Trump. So you prevented people from working. That is not, absolutely not, something that you should do, ever. That should never have been on the table, ever. It should never have been on the table. That should never have been a possibility that we even talked about. It makes no sense. It makes no sense at all. And it's like, that's what... Cyan, hello. I hope all is well. Thank you for watching always. You have so much here. U.S. bank derivatives book larger. There are more. This is Financial Times. U.S. bank derivatives books larger since rescue of Bear Stearns in 2008. There's more money. There's trillions of dollars more money. Here, I took a screenshot of it. So, when they... Hold on, I took a screenshot of it. Where is it? Billions of dollars more. Or no, trillions. So Goldman Sachs has $42 trillion in derivatives contracts. And this is only what we know that's public. We don't know the transactions that are hidden from the SEC, which is legal actually. Citibank, $40 trillion in derivatives. JP Morgan, $46 trillion. Bank of America, $14 trillion. Wells Fargo, $8 trillion. In terms of total assets to derivatives, the ratio is 154 to 1, 25 to 1, 15 to 1, 6 to 1, 4 to 1. This is a Kiplinger article, Kiplinger.com. By one estimate, it's about 157 trillion for the top 5 banks I just mentioned. So, I mean, it's like we're heading towards a disaster. And it's like nobody's talking about this because it's not interest. It doesn't, look, talking about economic indicators does not evoke emotion. Okay? It doesn't evoke the feelings of moral superiority. That is not enjoyable for the left. It's like completely not enjoyable at all. It doesn't evoke these types of like emotions. It doesn't make people feel superior on Twitter. You can't, if you're on the far left, you can't get an emotional response and retweeted by saying, you know what? If the producer price index wasn't so high, maybe consumers wouldn't be forced to pay such higher prices. Okay? 1 retweet. 2 retweets. Wah, wah. Boring. Boring. Paul, hello. David, hello. That's not what this racket or grift is all about on the left. They call anyone who disagrees with them grifters, but the real grifters are the people who talk about how life should be and how life is unfair and always vote Democrat. Always vote Democrat, no matter what. No matter what. It's like you're not even bringing up the economic indicators that are showing wealth inequality has increased. Their whole thing, their whole racket is predicated upon feeling morally superior. That's the whole thing. It's the whole racket and scam and grift. And calling people prejudice. Or the R word. That's it. There was a very famous musical artist, singer, and she retweeted Tucker Carlson because she happened to agree with him on an issue. And then a Twitch streamer who just bought good for him, but millions upon millions of dollars of a home, $3 million, whatever. It doesn't matter. It doesn't matter. Good for him. But he's like a socialist. If you ask him, he's like a socialist. If you're a socialist and you're buying millions of dollars of property, you're not a socialist. You're a capitalist. Good for you. Good for you. I'm not knocking you. But just be honest in the grift. Be honest in the racket and the scam. And everybody, you cannot be a super wealthy socialist. It doesn't work out that way, or a communist. Because if the entire country had the economic system you wanted, nobody would be buying that property or living the lifestyle you live. Because you look at the communist countries still around today, the level of poverty is far greater. And the countries that are the most socialist countries have a far greater level of poverty. The poverty rates you cannot even argue with. So it's like the whole racket is predicated upon public relations and this cult, this kind of tribalism. They only care about feeling a certain way. They don't care about reality. So when the musical artist retweets Tucker Carlson, a Twitch star, a extremely wealthy socialist, says, oh, well, you know Tucker Carlson is a supremacist. And it's like, no, he's not, number one. Number two, anyone who disagrees with Democrats is labeled that. Number three, you cannot always, it's not sustainable to continually marginalize millions of people and paint them with one brush, which is absurd because it's not the case, simply because they disagree with you on a topic. So, ladies and gentlemen, I think that I think that I will come back at 11. Be here at 11 p.m. So I'll come back with a new segment, a new live stream. I'll take a little intermission. And we'll come back at 11 and talk about a different topic, because I think I might be even making myself fall asleep. So I will be back, ladies and gentlemen, at 11 p.m. Pacific. I'll set up the live stream now. Different topic. And to my super chat, thank you. What did I just do? I'm like losing it. To my super chat, thank you. Eric, Luke, thank you. I'll be back at 11, ladies and gentlemen.